Hello, welcome back. This is Shivansh Sharma. Welcome to Shivansh Sharma classes. We were solving the questions for bank reconciliation statement. This is lecture 2. We'll continue our questions. We solved the question till question number 11, which was very easy question. Now we'll solve from question number 12. And while solving these questions, we'll find new points and we'll discuss those points in the question itself. So this is question number 12. We need to prepare bank reconciliation for Naman, which is prepared on 31st March. So you need to remember all those points must be cleared by 31st March. If they're not cleared or cleared in the next month, we need to just make adjustment for all those points. So first point is that bank balance is 40960. This is for the cash book. So cash book starting point plus 40960, which is a debit balance because nothing is said, so we always assume favorable balance. And for the cash book, we already know if it is favorable, it is going to be debit balance. The bank charges rupees 100 on 31st March are not entered. So bank must have entered it because whenever bank makes any adjustment in a bank account, it makes it directly. And whenever we get the notification about it, then only we make the adjustment in the cash book. So it was not entered in the cash book. Cash book balance 40960 positive. We know this is debit balance. The other is bank interest charged. So bank must have charged 100 rupees from our account. Here we have not entered anything. Since cash book is the starting point, we'll subtract 100 from here as well so that the total amount becomes equal. So minus 100. On 21st March, which is before 31st March only, a debtor paid amount directly into my bank account. So this must be plus 2000 in the passbook, but still the adjustment needs to be made. This was plus 2000 because debtor directly paid to me. This is the starting point. Nothing was entered here. So for the adjustment, we'll just add 2000 here to make things equal. So this is plus 2000 direct deposits by customer. Next point is checks totaling 12980 were issued, but they were still not presented. So in the next adjustment, we were expecting 12980 as the deduction in our cash book, but nothing was entered in the passbook because still they were not presented. So the adjustment will be this. Next adjustment they have given is a bill for 6900 discounted with the bank is entered in the cash book with recording the discount charge as 800. So we are going to discuss this topic now in detail. If you really want to refer the whole topic of bills of exchange, because this point is related to bills of exchange, I've uploaded 6 lectures of the topic on my YouTube channel. Of course, it is free. The topic is in Hindi, so if you don't understand Hindi, you just need to focus here only because I'm going to discuss the topic in detail. What is bills? Basically, you just need to assume that you have a check, because check is also a bill of type of bills of exchange. So you have a check. This check you give to someone else and that person takes it to the bank and takes the money. Bills of exchange is similar in nature. In fact, checks are type of bills of exchange. So bills of exchange is a contract written on the piece of paper where one is promising some amount to the other person for the amount they must have received in the value. Let's say you must have purchased some goods for rupees 10,000. So you have made a bills of exchange promising the other party that you will pay. In short, it is a contract where one amount is written here and signed below. You'll just take that bills of exchange if you want the payment to the bank. This is the bank. Bank will give you the amount immediately. Now this is a piece of paper. You may say, if I can do the same, I'll just write down any crazy amount on a piece of paper and take it to the bank and bank will give me the amount. No, there must be some party supporting the payment. Bank needs a surety. There are two parties, let's say A and B. A has sold some goods for 10,000 rupees, whereas the other party has promised some amount. The bills of exchange we are talking about here is the promissory note that you will study in different chapter altogether. But for the understanding right now, you're just supporting the payment of this 10,000 rupees by a surety, which is a legal contract known as bills of exchange. You'll give this bills of exchange to the other party. This party will take this bills of exchange to the bank, and bank will pay you amount immediately. This is called discounting. Now there are other ways of getting the payment as well. You can also ignore going to the bank and you can wait till the time the other party pays you. This bills of exchange has a certain period known as the credit period, let's say 3 months. So this party is promising you to pay after 3 months. So you don't want to wait for the 3 months. So you'll go to the bank and discount the bills of exchange immediately. In Hindi we call it khulla karana. Khulla karana means if you want to get 10,000 as the payment, bank will give you 9,500 immediately, whereas 500 will be the bank's income, where bank will deduct certain amount because bank is paying you certain amount in exchange of a piece of paper that may not be honored later on, because now B will go to the bank and pay the amount to the bank because B had the prime liability of payment towards A. So instead of giving payment to A, now B will pay to the bank, and just for this assurity only, bank will give immediately some amount to A. So this is overall procedure. A wants money, B wants to pay the money. A will immediately go to the bank and B will later on pay to the bank. He will get immediately some amount but not the complete amount. Bank will deduct certain charges which are called discount charges. Now, if you had given a bill of 10,000, you must have received 9,500. So in the cash book, what you have done is you have entered the whole amount, that is the amount that you have received plus the discount charges. Question has specifically said that in the cash book you have entered both the amount, but we know in the cash book we are just supposed to enter only the cash amount, not the discount, because this goes to profit and loss account, because this is an expense for me, whereas for the bank it was the income. But some people may confuse it, they will just enter it here as the income. No, this is my account, not the bank's profit and loss. Bank will charge this 500 in its profit and loss on the income side, whereas I'll just charge it in my P&L on the debit side. We should be completely ignoring this point because for the bank column in both the sides this is irrelevant. So here I had entered in the cash book and this is the error basically here, so I just need to adjust this amount. So in the question they have said a bill of 6,900 discounted with the bank, and in the cash book we have recorded it with the discount charge, whereas we know if 6,900 is the total bill amount and 800 was the charge, we should have entered 6,100 in the cash book, whereas 800 must have gone to the P&L account. But we have entered the total 6,900, which is 6,100 plus 800 as a discount charge. So what is the point of difference here? It is 800 only. What is the total adjustment? This is the cash book and this is the passbook. I had a bill of 6,900 and I entered the whole amount in my cash book, whereas in the passbook bank only gave me 6,100. So what is the difference here? 800 only. So I just need to subtract 800 from here just to make things equal. So 800 must be deducted from here, and this is discount charges entered in cash book. And we already know that this discount charge is basically charged in the P&L, not in cash book. The other point is that 3,520 is entered in the cash book as paid into bank. I must have deposited something in my bank, so I was expecting increase in my bank account and not credited by the bank until the following day. The following day is 1st April and I'm preparing bank reconciliation on 31st March only. So for 31st March it is a point of difference. So here I was expecting 3,520 in my bank account and here nothing was credited, so I'll just subtract from here. Now some students may confuse again because this question has said paid into bank. So some people may think if I have paid into bank my cash book must decrease, but no, this is cash book bank column. My cash column must have decreased because I have paid the cash to banks, but so my cash account must have decreased. But this is the bank column. I must have expected increase in my bank column. So here plus 3520, but it was not credited by bank until the following day. So this is the point of difference. So I must deduct it. So you just need to make your mind clear that this is not the cash column, this is the bank column. So minus 3520. Next point is no entry has been made in the cash book to record the dishonor on March 15 of a check of 650 rupees received from Bhanu. Bhanu must have been my customer, so he had given me some check. So 650 rupees is something that I was expecting in my cash book because some customer had given some check to me, but this was dishonored. That is that nothing was received in my passbook. So just to make things equal, I'll just subtract from here and this will become equal 650 rupees. So this is going to come 50870 positive for the passbook, which is why this is going to be the credit balance. Okay, this was easy question. There were certain points that were new for us and we have made detailed analysis for them. So just practice these questions. If you want to understand the concept again, just rewind the video and watch it. One thing that I will request is that I can only support myself because I'm also working, so I take extra time to prepare these videos for those students who cannot afford the premium classes, who can't go to the classes because of various reasons. So I'm creating these videos, so I'll just request you to support me by watching the ads, and as much as ads you can watch, you just need to tolerate them. I'll just request you to sit down and watch the whole ad so that I can receive some income on YouTube. And if you have ad blocks, just disable them, and this is the request from my side. Let's proceed to question number 13. For the first time they are giving you the passbook balance, which is 7,000. Nothing is mentioned favorable or unfavorable. We'll always assume favorable, and 7,000 is positive amount for the passbook, which is why it is the credit balance. There is a check of 1,000 that was directly deposited by the customer. So the analysis is cash book, passbook. This is passbook balance, credit balance, 7,000 positive. 1,000 was deposited by the customer directly into my account. Nothing was entered in the cash book. Since passbook is the starting point, I'll just make the adjustment here so that both sides can become equal. So this is 1,000 minus. So this is direct deposits by the customer. And if you want to learn the signs, this is going to create a problem because this is totally opposite of what we did when cash book was the starting point. So you don't cram it, you just understand the concept, and it will take time. Basically just prepare this analysis in the rough area and just again and again analyze the situation. What this will do is it will take some time while solving the questions as compared to those students who have crammed, who have learned the science, but it will give you an edge over them because you'll not just understand the concept, but also this will give you a surety in your mind. So you're just reducing the risk of losing the marks for the question, which is very easy, and that's something you can get only when you do the analysis and a lot of practice. I have not solved any extra book here like T.S. Grewal's search book, but you can refer that book as well. We are just focusing on NCERT questions. These all questions are belonging to NCERT book. The reason I'm choosing NCERT is because I can use it online as well to avoid all the copyrights and to keep all the lectures free of cost, and also that these questions are far better than other questions that we see in the extra books. The reason is NCERT always gives you the best questions. Next point is bank has credited Mr. Himanshu's account with the interest of 700 rupees. So this is interest received by Mr. Himanshu. So 700 on the passbook side but nothing on the cash book side. Since passbook is the starting point, we'll just subtract 700 from there so that both sides can become nil. Okay, next is 3,000 were issued. Okay, I'll discuss this point later on. 700 was added, nothing here, so 700 must be subtracted so that both sides can become equal. Bank interest received. Okay, if bank wants to charge something, again it will subtract directly from your account, which you will know after a certain time when you will actually print the passbook. Now there is a check of 3000, but only the checks related to 1000 rupees were not presented in December, so they must have been presented in January. So what we need to remember here is that point of difference is 1000 only, because 2000 rupees checks must have been presented and deducted from my passbook as well. So here if I give you complete analysis, 3000 I was expecting as deduction because I had issued check, but only 2000 were deducted from here. So the point of difference is 1000. Since passbook is the starting point, I'll subtract 1000 again so that both sides can become equal. So this is the adjustment, 1000 minus. This is the complete overview, complete situation. Okay, so this is 4300 positive cash book balance, which is going to be debit then. So we'll solve question number 14 now. It is saying we need to prepare bank reconciliation showing the balance as per cash book on December 31st. It is demanding a reconciliation where cash book is the end point. Eventually we need to show cash book closing point. So passbook must be my starting point. So they must have given my passbook balance, yes, 50,000 rupees positive, therefore credit balance. Two checks of 2000, 5000 were paid into bank in October. So it is December going on. In October, two checks were paid into bank but still not credited by the bank. So till December still they were not cleared. Now you may confuse again with the word paid into bank. You may assume this is basically a payment check, but no, this is a check that bank has to pay in our account. That means bank will take it to the other bank and receive the payment and then credit it in my bank account. This is also verified when they say credited by bank. So credit means it is going to increase my account. So 2000 plus 7000, total of 7000 was deposited in October, still not cleared till December. So we don't know when it will clear, but for the December 31st it is still uncleared check. So we need to make adjustment for check deposited but not cleared, uncleared checks basically. Check of 800 which was received from the customer was entered into bank column of the cash book but still not credited by the bank or omitted by bank. These 2 points are similar, same in fact, but they have changed the language in both the points. This is also uncleared checks, checks deposited but were not entered by the bank. Okay, so you can see the type of language that they can use to confuse you. These are similar points only, and which is why we are solving a lot of questions so that we can equip ourselves with all the languages that they can play with, so that in the exam we don't get confused. So 7000 plus 800, we can combine 7000, that is 5000 plus 2000, but we cannot combine 7000 with 800 because these are two separate transactions. So here cash book, passbook, 7000 was expected here but nothing was entered here. Since passbook is my starting point, so here we'll just add 7000 so that both sides can become equal. Same goes with 800, we were expecting here but nothing was entered here, so we'll just add 800 here as well so that things can become equal. The things mentioned with the arrow are basically adjustments. So passbook balance, we know favorable, therefore credit balance was 50,000, and we'll just add 7,000 and we'll just add 800. These are uncleared checks, but please mention A and B so that you can show to the examiner that these were two separate transactions. In fact, you have treated them separately as well. You can also show 2000 plus 5000 as well so that you can make your point even more clear to the examiner. The C point is checks for 10,000 were issued but not credited by the bank on December. It is simple adjustment. We'll just say that here we were expecting 10,000 as subtraction, nothing was entered here, so we'll just subtract from here as well because passbook was the starting point. So 10,000 for unpresented checks. interest on investment rupees 10,000 were collected by bank. Whenever we make any investment, let's say we have purchased some shares of the company, that company will give us dividend, or if we have given loan to some person, that will give us interest on that loan. So this is going to be my income. So that income basically comes directly into my bank account. So any interest on investment is received directly by the bank, which is 1,000 rupees, but nothing is entered here. So we'll just subtract 1,000 from here so that both sides can become equal. This is similar to the direct deposit by the customer. So if I see my total balance, it will be 46,800 positive for the cash book, therefore debit balance. We'll just go to the next question. This is question number 15. Balance as per the passbook 3,000 positive. Checks paid into bank yet not cleared 1,000 and 500. We can combine them. And bank charges 300. Check issued but not presented. We can again combine them. And interest entered in the passbook but not entered in the cash book, 100 rupees. This is going to be interest earned, because until unless bank says interest charged, it is always going to be assumed as the interest that we will receive. Okay, so I'll solve this question quickly for you because this is not complicated question. All the points are repetitive. This was easy question, right? We'll just solve question number 16 here. Passbook balance is credit balance, so this is favorable, very easy. Now this is again different type of question. The question is saying passbook has the current account. So there are two types of accounts, current account and savings account. Current account is the account basically in which we don't get the interest. It is quickly changing, which is why it is given the name current account. It is suitable for the businesses where transactions are quite large, so plus minus is going very rapidly. And savings account is for those who want to earn the interest. So this is basically for the households who want to earn the interest. So there are two types of accounts. Even businesses can have the savings account when they don't want to use that money for the longer period, so they'll just keep it in the savings account, or the fixed deposits they can do so that they can earn something from it. Here for the question, we just need to make sure that both the accounts are similar in the passbook and the cash book. In the cash book, we'll be preparing two bank columns now. First column will be for the current account and the other one will be for the savings account. If they are entered in wrong account, then it will create a difference, and which is why they are playing with the words here. They are just saying that Mohit is having the current account, but in the adjustment they will be talking about saving account as well. So in the summary, you just need to know in the cash book we have two columns. One is the savings, the other one will be current. Okay, but passbook is only given as current account because we have not printed the savings one. So reconciliation will be done between these two. So the first point they have said is a check of 400 drawn on his saving account has not been shown on current account. Check is drawn, which is why you are expecting the payment, and it is shown on your current account. So here you were expecting 400 as deduction, but unfortunately instead of saving account here, they have entered it here. Okay, passbook is the starting point, nothing is mentioned here. So just to reconcile these two, you'll add 400 here so that this can become equal. 400 will also be, sorry, here it will be added only, then it can become 0, right? So this will be 400 plus. Okay, he issued two checks of 300 and 500 on December 25, but only first check was presented for payment, that is 300. So 500 is still not presented. So 500 was expected here, but nothing was subtracted here. So we'll just subtract 500 from here as well so that both sides can become equal. Okay, savings account is not our headache. BRS is only prepared for current account. Okay, The next point is check issued by Mr. Mohit 500 rupees on December 25. It was not presented for payment, whereas it was recorded twice in the cash book. So in the cash book, I was expecting 1000 as the deduction, where nothing was mentioned here. So just to make things equal, because cash passbook is the starting point, we'll just subtract 1000 from here as well, so that both sides can become equal. So this will be 1000 subtracted from the main balance. So the balance will be 18900, which is coming positive. It is debit balance for the cash book. 17th question, it is saying that Rakesh had an overdraft of 8000 as shown in the cash book. So this is cash book balance. Overdraft means negative 8000. So this is credit balance. For the first time they are just changing the signs. Okay, checks amounting to 2000 had been paid by him but were not collected. When we say paid into bank, it means we are just expecting a deposit, so they were not collected. 2000 were expected here but not here, so we'll just subtract 2000 from here so that both sides can become equal, because cash book is the starting point. So we'll subtract 2000 here. Uncleared checks. Next point is he issued checks of 800 which were not presented to the bank up to that date. So 800 was the expected deduction, nothing was mentioned here, so 800 will be added. So the next point they're saying is that there was a debit in the passbook of 60 rupees for interest. This may be any interest, bank interest, but they have specifically mentioned 100 rupees for bank charges. So this is bank charge, whereas this is any other interest which is again charged in the bank. So these both are bank charges that bank has deducted directly in the passbook, but nothing has been deducted in the cash book. So we'll subtract 160 from the cash book also. So this will be 60 deducted here and 100 deducted here. If you have not understood, 60 was the debit, so 60 was deducted here, nothing deducted here. So 60 total will become equal. 100 was also deducted here because this was written as bank charges, so we know this was also debited. See, usually students, what they will do, they will understand this as the bank charge, whereas they will understand this as the bank interest, and they'll just add it here. No, this is also deduction, so there will be deduction here also because nothing was entered here. It will come 9360, so this will be passbook balance. Now debit column, because for the bank unfavorable balance means debit balance. Question number 18, it is saying overdraft as per cash book negative 10,000, therefore credit balance. Bank charges debited in the passbook, same adjustment we did above. Interest on overdraft, which is also basically a charge. Interest on overdraft. On investment we receive the interest, but on overdraft, on the negative balance, we pay the interest. So bank must have deducted 380 rupees from a passbook, but we had not entered it in the cash book, so it is similar to the 100 rupees above. Check issued but not cashed prior to 31st, so this is check issued, normal adjustment. Interest on investment, we receive interest on investment, so this is 600 received directly into the bank but not in the cash book. Check paid into bank but not cleared, this is check deposited. When we pay something in the bank, we are expecting a deposit, so 1100. I'll just solve this question quickly for you. So this is your complete question. It was very easy. If you want the breakup, you can contact me in the comment section, or you can also contact me through my website. This is very easy question, otherwise you won't need the help. Question number 19. A check post dated for rupees 1000 has been debited in the bank column of cash book. We just need to see first what is the starting point. So I guess I have missed the starting point here. You'll just write down the starting point as your cash book negative balance, and I'm giving you the negative balance. This is cash book overdraft, which is credit balance negative 90600. You just need to start from here. Next it is saying a check post dated of rupees 1000. What is a post dated check? There are different types of checks now that are dependent on its date that is written. If check does not have the date, it is going to be invalid. So check must have the date. Let's say I am about to pay an amount in the future, so I'll just write down a date on the check, but it can only and only be paid into bank or presented to the bank only when its date comes. Basically any check has a date on it after which only the bank will accept it. In India it is 3 months period after which you cannot present the check. Okay, so every check has a date. After 3 months of it, it becomes a stale check. Okay, you must have heard that this check cannot be presented after 3 months. Okay, this is as per RBI guidelines. In India it is the central bank, so after 3 months you cannot present it. So you have only 3 months to present this check. What people do is they just write down the check for, let's say here you are making the check, this is a date June 30 and you're making a check 30th April, so you'll just write down 36 here only, and you know when you will go to the bank, let's say today only you're going to the bank, why will bank accept this check? Because bank knows that its payment starts from 30th June only, so bank will ask you to come only on 30th date. This does not make checks invalid, but it cannot be presented until its date comes, and only after that it can be presented. So this is the period when you can actually present it. This is not the period, this is not the period. This is the only period when you can present the check. Okay, so they are saying there is a post dated check. This check is basically post dated check. That means its date is still about to come. So 1000 has been debited in the bank column of the cash book, but you know in the cash book you have already debited 1000 rupees. Debit means you were expecting a deposit, because for the cash book debit means increase in the account, and here you have not still presented it because you can't present it. So what we are assuming here is that for the month of April you are preparing bank reconciliation statement, and in the month of April it is called post dated because question is calling it post dated. So that means it is not allowed to be presented in month of April. So in the cash book you were expecting 1000 but nothing here, so you'll just subtract from here. Okay, in short you can say it is still not cleared check, checks deposited but not cleared. But again they have changed the language, so I needed to explain you everything in detail. So we'll just subtract here because cash book is the starting point. 1000 post dated check. Next is a check of 8000 was drawn in favor of Manohar, has not been presented. When you draw in someone's favor, so you call it check issued but not presented. You were expecting 8000 deduction from here but still not presented here, so you'll just add 8000 here. Next it says check totaling of 1500 deposited in the bank but still not collected. It is uncleared check only, and check of 5000 was dishonored. So first I'll just make the adjustment for these two. Next it says check got dishonored. So you were expecting 5000 in your cash book but nothing was received, so you'll just subtract from here. Okay, so 5000 you just need to subtract here. This is as per passbook, therefore debit balance, because this is overdraft as per passbook.